Good afternoon, my fellow traders. My name is Michalis, and I'm one of the market analysts here at HFM. And I'd like to welcome everybody to another live market watch where we're going to be looking at a really important announcement because we today are going to be looking at the inflation release. So, the consumer price index, us traders, we know it as the CPI. We're going to have three main releases. The two main releases is going to be the core CPI, which is basically inflation but not including very volatile assets such as, for example, food related products, drink related products, tobacco as well. Also, petrol, diesel tends to be very volatile. And the other release that we're also going to be seeing and going to be analyzing together is the standard CPI as well, which is basically the standard basket of goods and services, which inflation is basically driven by. So this is what we're going to be looking at today. We're specifically going to be looking at gold as well. I've already had some questions. Some people are saying, are we only going to be looking at gold? Are we going to be looking at other assets as well? We are going to be concentrating a large part of today's webinar on gold. But of course, we are going to be analyzing, generally speaking as well, what today's release means for the financial trading markets overall. Now, if we're looking at gold, there's a few things, of course, to note in regards to gold, because if we're looking at gold, we definitely can see the pattern is following an uptrend. So we can see, for example, we have a high here. We can see the next high is higher. If we look at the high before that, we can see we've had three consecutive higher highs. If we're looking at the lower highs as well, the higher lows as well, we can see that also is consecutively higher and higher. So the trend at the moment is very clearly in favor of the upward price movement. Also, if we're looking at our two main moving averages, we can definitely see the moving average, the price is trading above the moving averages. But there is a specific signal which is very important because what we can actually see on the RSI, which is the oscillator at the bottom of the chart, is that we can see divergence. Because what you can see on the price itself is that most of the time we're seeing higher highs. If we're looking at the RSI, though, we're actually seeing significantly lower highs. So that's something which is extremely important because that's giving us an indication that, of course, there is a possibility for the price to not continue that upward trend, because so far we are continuing the upward trend, but to not continue that upward trend and actually look at potentially start to see sell trades and downward facing positions start to materialize. So that's a very important announcement. And also, if we are going to look at downward facing signals, then the question is, ladies and gentlemen, of course, what kind of signal, how low can the price potentially fall to? Now, if we're going to look at wolf wave theories, for example, if we look at wolf wave theories, we always say to look at the high that we can see here and the low, and we draw those two lines up like so. Now, on this occasion, it's an upward tilted line. Sometimes, though, it may even be a downward tilting line or even a horizontal line. So, for example, we could have been using it like this as well. So looking at this high and this low. Now, what's the idea of this? The idea of this is a real theory, ladies and gentlemen. It's called the wolf wave theory. This will basically indicate to us where at first, because of course the price can potentially continue to decline below that, but at first, where our trade is going to aim at the price declining to. Because of course, if we're able to determine how large institutions and main market makers will drive the price, then of course we can ride that trend. Somebody says, what time frame is this? This is a 2-hour time frame. We are of course going to switch over to especially shorter term time frames. So the great thing about this setup, ladies and gentlemen, is because even though we've got a slight bullish bias, if it wasn't for the divergence that we're seeing on the RSI, it would be a significant bullish bias. But because we've got a divergence signal on the oscillator, then it's a slight, should we say, bias towards upward price movement. But if we're going to see downward price movement, then we've got this line here, which is based on the wolf wave theory, which could point to us where the price is going to decline to. And what does that also fall in line with? This is the trend line, ladies and gentlemen. Here we've got a 75 bar exponential moving average. And if we're looking at that as well, ladies and gentlemen, you can see it's indicating the same area. So both indications are indicating to us that the same areas where the price is going to find support at first. And also, if we look at where the RSI is finding support, we can see it's finding support here. Now, we're just above that level. If it declines to this level here, most likely it will go to this black line, the 49.5 level. So even the RSI is indicating that if we're going to get downward price movement, this is a significant potential target, which will be vital for traders. Now, some people are going to say to us, what indications do we have that we're going to see downward price movement? Well, ladies and gentlemen, the indications that we currently have is that inflation is going to rise in value. Now, most economists believe that inflation will rise to 2.6%. However, there is certain institutions. So, for example, if we look at Jefferies, which is definitely, should we say, a more hawkish member of Wall Street, a very large institution, but definitely one of the more hawkish members. They are indicating that actually it's going to rise to 2.7%. Now, 2.7% is significantly higher than where we currently are at. We're currently at 2.4%. So to rise by 3 points is a significant increase. So if we are going to get higher inflation, what does that mean, ladies and gentlemen? Well, very simply, that means that the Federal Reserve is not likely to cut interest rates. So if we are going to get really high inflation rates of, again, 2.7%, then the price of gold can potentially decline, in which case we are going to aim for that level there, ladies and gentlemen, potentially. Again, the reason why higher inflation is negative for gold and can pressure gold is because if we're going to get higher inflation, then there's a significantly higher possibility that the Federal Reserve will delay any interest rate cuts. Because don't forget, latest NFP data, latest employment data was extremely strong. So there's no pressure from the employment sector to support that sector. And at the same time, we've got higher inflation. So that can really give us a clear indication that the price can potentially decline, in which case we're going to aim for that level there. But what else do we have to, of course, keep into consideration? I actually share the economic calendar with everybody here, ladies and gentlemen. So we can see the major announcements. We've got the consumer price index, excluding food and energy. So basically the core CPI. We've also got the standard CPI here as well. So for example, our calendar is indicating it's going to rise to 2.7. Some institutions are advising 2.6. Now, if it's going to come in lower than that, and keep in mind, ladies and gentlemen, a lot of people have been saying inflation's going to rise, politicians have been saying it, economists have been saying it, bankers have been saying it. For example, the Federal Reserve had probably been the main member saying inflation's going to rise. But if you've looked at the past 4 to 5 months, it hasn't risen at all. It hasn't risen. So for 4 consecutive months, we've seen that inflation read lower than the projections. Everybody's projections and expectations was for inflation to increase, like we can see today as well, but it was significantly lower. So for example, the previous month, we were expecting inflation to rise to 2.5%, came in at 2.4. If we look at the month before that, we were expecting inflation to come in at 2.4%, came in at 2.3. That's something that we are seeing consecutively now for 4 consecutive months. So if we are going to get another upset, which is understandable, guys, it's not something which is unexpected. Like I said, it's happened for 4 straight months. If we are going to get lower inflation again, so again, if it comes in at 2.4% for a second consecutive month, then actually the price can potentially find support, in which case, if it does find support, it can significantly increase. Now, if it does significantly increase, the question is where we're likely to get buy signals. Now, a lot of people, instead of looking at the breakout, because if you look at the breakout, you're missing so much price movement. So if we're looking at the low all the way to the breakout, it's almost 0.5%. So you have to sit back and wait 0.5%. You may get to an area where the price is about to see a retracement. You may get to an area where you're potentially in the short term overbought. So instead of aiming for the breakout, a lot of traders will look at 61% of the retracement being regained in favor of the trend. Some people may say, why 61%? Well, if we're going to look at standard economics, up to 60% is a retracement. So if we've got 61%, then it's no longer considered a retracement and potentially is indicating upward price movement. So if we're going to get the price increasing above this level here, like so, okay, if we're going to get an indication like this line here, then that will indicate upward price movement. So if we're going to see lower inflation, again, 2.5%, 2.4%, depends how low, then we have an indication here of upward price movement. Some people saying buy or sell, buy or sell. We're telling you right now what indications are indicating. So you have to listen very, very clearly. If we're going to say, I'll say it very clear, if we're going to see lower inflation, okay, 2.4%, 2.5%, and we're going to simultaneously get the price regaining 61% momentum, so at 3359.59, an increase above here, we have indications of potential buy signals. If we're going to get higher inflation, ladies and gentlemen, and potentially we're going to get a breakout, I'll switch over to a smaller time frame if that helps. Bear with me. Here we go. So I'm on a 3-minute time frame here. Let's go to gold. Here we go. 3-minute time frame. If we're going to get inflation which is higher, we can look at two areas. We can look at the breakout here, or we can look at, again, 61% of the retracement being formed. So 61% is actually at this line here. So those are your very clear buy and sell signals based on technical analysis. It's very, very clear. It's of course going to be dependent on what is about to be released in less than 2 minutes. Now, if we're looking at the 3-minute time frame, there is indications mainly towards downward price movement. Because if we're looking at the main support level, which could be placed here, it could be placed here, the average support level is probably going to be in and around this level here, ladies and gentlemen. We've broken below that level. Somebody says, am I late for selling? No, not necessarily. The announcement hasn't even been made. So once the announcement is made, if you think, for example, inflation is going to be significantly higher and it's going to shoot downwards, it's going to happen when the announcement is made. So you're not necessarily too late for selling. Somebody says here, can I place pending orders at those levels? Guys, in regards to pending orders, keep in mind, when there is news announcement, there is slippage because of volatility and because not all orders are filled at the same price. So if you're going to place pending orders, it's not going to open at that level. It may open 20 pips lower or 20 pips higher. So pending orders have that difficulty and disadvantage. It's better to be analyzing the market, looking at the release. The release is in 45 seconds. We're going to look at the announcement live, ladies and gentlemen. Not even 45 seconds. In 10 seconds, we're going to get the announcement. So let's see if we're going to get upward price movement or lower price movement. Depends on if we're going to see higher inflation or lower inflation. It's about to be released in 2 seconds, ladies and gentlemen. 2 seconds here. So announcements made. We're at first seeing upward price movement. Let's have a look at what the official inflation data has been confirmed as. Let me just reload my page. So the monthly inflation, ladies and gentlemen, has come in at 0.3%. So as expected. the yearly inflation has risen to 2.7%, which is definitely something which is positive for the US dollar, not necessarily something positive for gold. But if we're looking at the core CPI, the core CPI has come in lower than expectations. So, for example, I'll bring back up our calendar here. I'll very quickly refresh for everybody. Let's look at today's announcements. Let's look at the US dollar. Here we go. So inflation came in at 2.7% as expected. That is extremely high, ladies and gentlemen. That is extremely high. CPI on a monthly basis came in as expected. If we're looking at the core CPI announcement, though, ladies and gentlemen, it's coming lower than expected. So there's kind of some news which is in favor of gold's upward price movement, some news which is in favor of the downward price movement. This is because the core CPI came in lower than expected. The standard CPI came in with higher inflation figures. This is also why we've seen potentially that very quick upward price movement and then downward price movement. Now we've got the first trigger here, ladies and gentlemen. So we've got our sell trade triggered here. If it keeps continuing that downward price movement, then we're going to have very soon a second sell trade as well. So I've got some questions here. I'll very quickly answer these questions. Somebody says, is gold the only asset which is going to be affected by this? No, definitely not. All assets will be impacted by today's CPI announcement. Now it's just the time, because we've seen that very large spike upwards. It's fully corrected back downwards. It's at the exact price we previously was at. Somebody says here, why we're not seeing more volatility. Keep in mind, the core CPI was better than expected. The standard CPI saw inflation rise higher, which is worse for gold. So you've got a slight positive announcement and also a negative announcement as well. So this is one of the reasons why we're seeing up and down price movement and not necessarily a lot of volatility. But we have had here very clearly a sell trade triggered. Now it's starting to move its way back downwards. If it continues to maintain this momentum, ladies and gentlemen, and if it declines below this price here, then we have there very clear indications of downward price movement. Like I said, one signal has been triggered. We're just waiting to see if that second signal is about to be triggered as well. And we can see when we're looking at the impulse, when we're looking at the wave here, we're looking at and consider this as a retracement. If it regains momentum, okay, and it declines and continues to decline, especially below this black line, which is very close to declining below this level. If it declines below that level, ladies and gentlemen, then the 2-hour time frame is also indicating the benefits of speculating downward price movement. Now, if we are going to see downward price movements and we're opening these multiple sell trades, then we have to keep in mind about this. The area that we're going to aim for. So based on the moving average, this is an area we can aim on. Based on price action, it's this area that we can potentially aim for as well. Whereas if we're looking at, like I said, the wolf wave theory, and we're going to look at basically the high here with the current low here, then that is the indication there. So we're looking for the price as a first target to decline to this level here. And also the benefit of this level is because you're also staying clear of the support level, because you're above the support level and you're above the trend line, which is also a level you can find support at as well. So this is plenty of price movement for somebody to take advantage of. I mean, we're looking at price movement of 0.25%. So for any short-term trader, then 0.25% is a lot of price movement that they can take into consideration. Somebody says, can we look at the US dollar against the Canadian dollar? Yes, I'll look at that now. How do I get chart? Somebody says. It's very simple. We offer you MT5 for free. We also offer you MT4. You can also use our mobile app, which has a trader built in as well. The great thing about the mobile app is it also automatically will calculate everything for you in your currency. So, for example, you don't have to sit there and say, I'm aiming for 20 pips. You can actually see what 20 pips is worth in terms of dollars, in terms of euros, in terms of naira, whatever it may potentially be that you're trading in. So you're more easily able to see the reward to risk ratio, more able to be able to really look at where to put your stop loss, where to put your take profit in order to ensure you're not overexposed. And also, it confirms your exposure in terms of physical currency units as well. Now, somebody will come back to gold. Somebody says if we can look, well, actually, I'll look at this here as a last chart for gold, and then we'll come back to it. Now, if we're looking at our Bollinger Band, again, we definitely have indications here that we're seeing mainly momentum towards the downside. Our Bollinger Band line is here. That's just above the target area that we were looking at. The target area we were looking at was here. This is slightly above, so about 0.05% above. Either way, again, it depends on your approach and how short-term you are. This is also potentially something that you can aim for in terms of downward price movement. But that's also more or less in line with what we were looking at on the previous chart. Now, let's look at the stock market. Sorry, I apologize. Somebody says if we can look at the US dollar against the Canadian dollar. So let's look at that at first. US dollar, Canadian dollar. There we go. Now, if we're looking at the US dollar, Canadian dollar, we can definitely see range-bound trading conditions. We can definitely see sideways price movement. So in regards to this, ladies and gentlemen, what will be very key is an approach based on mean reversion strategy. What's the most important thing for a mean reversion strategy? The range-bound trading conditions is mainly been since here. So that's 101 points. That's 73 bars, ladies and gentlemen. So if we're going to look at the average, 73 bars, the price is here, right here. Okay. That's the average price of the range, ladies and gentlemen. That's the area when we're looking at mean reversion. If we're going to get to the resistant level, which is up here, and potentially because we're looking at range bound trading conditions, I'll lower the period on the RSI. I'll take it to a 10, for example. If we're going to move all the way up to here, okay, potentially because of the stronger CPI that we have seen and saw inflation rising to 2.7%. If it's going to rise to this resistant level, and if we get that resistant indication here on the RSI as well, then a lot of traders will aim at the price correcting back down to the average price. And you can see this has already been happening again and again and again. We actually will have a webinar, free webinar, available to everybody tomorrow, which is going to be based on mean reversion strategies. But what we can see, ladies and gentlemen, is that we've got a main support level approximately here. And I say here because we've got some support levels which are slightly higher, some support levels which are slightly lower. We can maybe increase it slightly more. So for example, here. Now, if we're going to see upward price movement, we're going to go to that resistant level like this. Then based on mean reversion, a lot of traders will speculate to the price going back to that average price. Now, some people will also look at the average price minus 10%. So, for example, they may aim here just to lower the risk of not being able to continue momentum all the way back to the average price. So that's one thing traders will look at. If we're going to see, if we're going to see downward price movement, so for example, down to here, then a lot of traders, what they'll do is they'll look at the price rebounding back to, again, our average price, which is this level here as well. And you can see that's the pattern that we have been seeing for the US dollar against the Canadian dollar. I apologize, ladies and gentlemen, if I start coughing because I'm I do have a slight cold. So here we can see that that's something that we are anyway continuously seeing. If I put the average price back, the average price is here. Okay. When we see a decline, so or even an increase in value. So for example, here we can see the price increased in value from there to there. We got to our resistant level, the price, it declined and hit it back again. Now, when we got a decline from that level, a decline down to here, the same thing happened, ladies and gentlemen. The price increased back upwards, like so, and we found support at this level, and we aimed for the average price, and we can see our target was hit. And that happens again and again and again. Again, for example, I'll look at this example here. Price was all the way up here, declined back to our average price. Price went all the way down to here, increased back up to the average price. So the same thing applies, ladies and gentlemen. What is the period for the moving average? On here, ladies and gentlemen, I've got 73 simple moving average because we've got 73 bars within the range bound trading conditions. Normally low, I'll have a 100 bar simple moving average and a 75 bar exponential moving average. And you can see how well these are working. For example, you can see I found support here, support, 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 acting as a great trend line, even though we're losing momentum and we're mainly seeing range-bound trading conditions. Now, somebody says the stock market, we can look at the stock market. Let's actually look at first, I would say the NASDAQ, which is one of our most traded indices. So here we got the NASDAQ 2-hour time frame. We've seen very strong upward price movement, but now we definitely can see a wick upwards and a wick downwards. We don't yet have divergence. You can see here very clear convergence, no indication of divergence here, ladies and gentlemen. The only thing is that if we're looking at the high from here compared to the high here, we are seeing slight divergence there, but there's a very strong distance between the two. The only thing I would say is that we're trading very far away from the average price. So for example, we went as high as 1.60% away from the average price. If we look at the last time we saw a big increase, 1.18% this time, very, very close, 1.16, 1.18%. What happened after that? What happened after the price went up to here? It retraced. So when we see a very strong deviation, we can see what actually happens is the price retraces back down. Let's look at another example. For example, if we look at here, ladies and gentlemen, this is 1.70%. So that's even stronger. That's a very strong deviation. So we're seeing that again, ladies and gentlemen. And if we go to actually, I prefer daily time frame. Let's keep to a 4-hour for a moment. Let's go to the daily. We can see also we're at an all-time high at the moment, if I'm not mistaken. Bear with me, ladies and gentlemen. Let's go to a weekly time frame. There we go. We can see we're at an all-time high as well, ladies and gentlemen. So that's also something that we can take into consideration. That partially is also related to the fact we're going to see earnings data, which is earnings season is going to be starting tomorrow. For earnings this week, it will mainly affect the Dow Jones actually, because we've got Johnson & Johnson releasing their earnings reports. We've got JP Morgan, we've got Goldman Sachs. Goldman Sachs is the most influential stock for the Dow Jones. They're all releasing their data this week. So that's going to create a lot of volatility for the Dow Jones. Whereas for the NASDAQ, it will have a domino effect on the NASDAQ. The only thing that's important for the NASDAQ this week is Netflix will be releasing their earnings data. So this upward price movement is partially due to the earnings data, but there is like I said, because of that strong deviation and very high price, then there is there is a potential there that it will retrace. Some people say, where's it going to retrace to if it retraces? In the longer term, if we can see a more of a retracement in the last 2 to 3 weeks, it could decline as low as there. Okay, which is basically the resistant level being flipped over to the support level, which is a very well-known theory within the market. However, it depends again on the earnings data as well, because if Netflix earnings data comes in significantly higher than expected, then that's of course going to support the Nasdaq. But there is a lot of risk there. Like I said, a hawkish Federal Reserve, higher inflation, and also we have to take into consideration the tariffs and the developments that we have been seeing. So we're looking at additional tariffs on Canada, additional tariffs on Mexico. We're looking at 50% tariffs on Brazil. According to the White House, Brazil has been targeting certain American based companies, which they're not happy about. And because of that, they are, of course, should we say, they are, of course, looking to use tariffs to punish them. Of course, most people believe, especially political experts, believe they're targeting Brazil in order to specifically target the BRICS organization. So we've got a lot of tariffs playing there. Even tariffs on the European Union is in the balance at the moment. If there's tariffs on the European Union, then for the stock market, that will be absolutely something which is terrible, detrimental for the stock market. But new developments was actually announced yesterday, which is 100% tariffs, which are buying from Russia. Now, a lot of people, they say most countries have sanctions on Russia, so not many people are buying from them. But there is a lot of nations which are buying oil from Russia. So that, ladies and gentlemen, will be a significant issue. That will be a very, very significant issue. And that can really trigger a stock market crash if it indeed does proceed to that extent. Because, of course, everybody knows, Trump says one thing, he's using it as a negotiation tactic. But if indeed it is something which he's planning to do, is a different story. So if indeed he does proceed with all these plans, then it can create a significantly risk-off appetite within the market. In order to get indications of a risk-off appetite within the market, people can also look at the VIX index, which I'll show you now. So if we go to futures, go to performances, indices, the VIX index, ladies and gentlemen, for the day is -3%. So that's positive actually for the stock market. And if you look at the performance of the stock market, all indices except the Dow Jones is increasing in value. So there we've got quite a lot of indications of upward price movement for the stock market. In addition to this, people can also look at the put to call ratio. So here, if we're looking at the fear and greed index, we can see it's extreme greed, so that indicates upward price movement. But what is really interesting is here, the put to call options. That again is declining, ladies and gentlemen. The fact that that is declining is positive for the market, the stock market. What's the put and call option index? Puts and calls are basically buys and sells, but on the futures market, not on the real market itself. Now, because of that, it's deemed as a leading indicator. Now, if that's declining, that's positive for the stock market. So these two, both the VIX and the put to call and the fear and greed index, is indicating upward price movements. What we can also look at is the individual components. Now, if we're looking at the individual components, for example, if we look at the top 10 companies, top 10 stocks, only one is declining, and it's only a slight decline. So that potentially is also an indication of upward price movement. However, what most people would do is they wouldn't look at the top 10. They'll look at all stocks which have 0.5% and above. So all stocks which have 0.5% and above is basically 31 stocks. So let me get my calculator out. So if we do, how many stocks are increasing in value? 31 stocks. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 19 over 31. 19 over 31. Is it more than 60%? Just over 60%. So that's just about edging towards an indication for a buy. So fundamental analysis is actually indicating more towards a buy. It's just a question, ladies and gentlemen, of is the price overreached? That's the main thing. Have we overreached on that price? But as I was looking at the VIX and the greed index, the put to call ratio as well, people can use the high to low index also. That's a good index that you can use for the stock market. You can see we are regaining that upward price movement and looking at regaining bullish price movement, generally speaking. So we can very clearly see that there in regards to the Nasdaq. Most likely will be the same for the S&P 500. However, what about the Dow Jones? So USA 13. Because like I said, this is going to be the most impacted by the earnings data, which is about to be released. So here we're not seeing buy signals actually, because we're trading between two lines, the two moving averages. So we've got an indication here of neutral indication. So basically neither indications of up or downward price movement. If we're looking at the RSI, even though it's above 50, is pointed downwards. So we've got a lot of conflicting indications there, neither a clear indication of up or downward price movement. Potentially what traders may look to do if they're looking to trade the Dow Jones is look at mean reversion strategies instead. Now, somebody says if you can look at silver, yes, of course. Silver actually increased to the highest level in almost 14 years, if I'm not mistaken. We can see very clear upward price movement. We can see it's retracing, slightly lost momentum. If momentum is regained, then again, we have a trend line here that we can aim for. Where will we see downward price movement be confirmed? Again, you can use the smaller time frame. We can see we're below, well, we're trying to be below the two moving averages. If it regains momentum, which is close to doing so now, if it drops just below 61 there, if it drops below 61, which it looks like it's about to, then we can look at a very short-term downward facing signal potentially. But of course, very short term, because we have a very strong resistance level here and a very strong resistance level here. So that's of course something we can of course keep in mind as well. Now, do we have any questions, ladies and gentlemen? Somebody says, what about the USD against Japanese yen? Very, very interesting. Japanese yen started off as the best performing currency of the year. Definitely isn't at the moment. It's more or less at the neutral level. Still performing better than the dollar, but more or less at the neutral level. But in the short to medium term, the dollar's really increasing. Upward price movement there. We can see it's retraced back because you can see the wick there. That means that we have to go here on our MT5. Where's my USD JPY? There we go. So if we want to see buy signals materialize, we want it, like I said, to increase back above 61. So we wanted to increase above there. If it increases above there, then we have an indication of upward price movement. Now, if it's going to drop below the moving averages or drop very close to them, so for example, somewhere here, then we can look at a secondary rebound buy. Not a martingale strategy, but a secondary buy, basically using the averaging down method. If it declines below that black line, though, then we're switching over to mainly an indication of downward price movement for the US dollar against Japanese yen. So hopefully that answers your question. Any other questions, ladies and gentlemen? I've got a question here. So let me quickly answer this question as well. It's a big paragraph. Apologies, let me just read it. Okay, so this individual is basically saying, can gold still rise? Yes, of course it can still rise, even though the momentum, like we said, now is downwards. And, higher inflation is known to pressure gold price, especially because we've seen higher inflation and better than expected employment data. That can really push oil prices lower. But there is factors there that can really trigger a risk-off appetite. And if we do see a risk-off appetite triggered, then we can see a correction back upwards. If we are going to see a correction back upwards in the short term, then we've got, this range here. The average on that range, most likely somewhere around this black line. So there, we can potentially target that if we're looking to speculate a correction back upwards. What could drive it? Tensions in terms of trade. Like I said, a lot of reports in regards to Mexico, tariffs on Canada, tariffs on Russia, anybody that deals with Russia. So that's something that, of course, we can take into consideration. In addition to that, potentially where can we open our buy if we are going to speculate our price movement? Where can we open the buy? Well, this here we can see is a retracement. So if we are going to open a buy, we have to have, of course, the stop loss and the reward to risk ratio. So if we're going to measure from the high to the low, if it regains basically to the candlestick high, which is basically there, then that's an indication of upward price movement. So I can see a lot of comments saying thank you. This is really helpful, guys. Keep in mind that we've got a lot of educational material for free. We have free webinars every single week. We look at analyzing events, news announcements, strategies, understanding the real basics of trading, as well as the more advanced tools as well. Tools like the order flow book, like the depth of markets, volume profiles, delta statistics, cumulative delta, all these more advanced indications as well. But we also have a lot of educational material for those beginner traders also. So feel free to sign up for free and view this information. Very, very soon we'll have newly released trading courses as well. So that's going to be very, very exciting also. But guys, we've been speaking for 45 minutes now. We've looked at US dollar against JPY, we've looked at gold, we've looked at the Nasdaq Dow Jones, we've looked at silver. Let's very quickly look at oil. Oil's declining, 3-minute time frame. Oil's increasing upwards slightly because of the announcement. And generally speaking, let's look at the performance of the currency market. Best performing currency of the day is the New Zealand dollar and Australian dollar. So if you think that dollar is going to increase because of this announcement, then there's disadvantages of doing so against the Australian dollar and New Zealand dollar. Worst performing currencies is the euro and Japanese yen as well. So guys, that's the end of today's session. Somebody says I failed to I failed to join your live sessions, you can watch the recording with the webinar as well. We email you the recording if you register for a webinar. So even if you cannot attend the webinar, register, we'll send you the recording and you can watch it in your free time. So guys, that's the end of today's session. Hopefully you found it educational and informative. I can see we've answered all questions. I can't see any other questions here. So in the meantime, guys, trade safe, trade responsibly. Enjoy the rest of your day, and we'll see you on our next live market view. In the meantime, goodbye.